Welcome back to another trade video. If you're new to the channel, I usually do weekly videos going over my trades for the week and talk about what trades I'm taking for the following week. If you want to check out those videos, feel free to check out my channel, and I've also started a Discord server where I share my trades for free, and that's down in the description. This video is part of a new series where I talk about the option strategies that I use as well as risk management. In this video, I'll be going over how to roll a covered call in Thinkorswim. And before we get into that, don't forget to like and subscribe so you can stay up to date on all of my trades. Now, before I jump into the specifics of how to roll a covered call, this video assumes you have some general knowledge about what call and put options are and know about buying and selling options. If you don't, I highly recommend just checking out some intro videos on options online before coming back and watching this video. So let's go ahead and jump into how to roll a covered call. So what does it even mean to roll an option? Basically, rolling an option is closing out your current position or buying back your option and then selling a new option. And that's basically all rolling an option is. Closing an option and then reopening a new option for a different date or different strike price. So specifically for covered calls, a covered call is basically when you own at least 100 shares of a stock, and then for every 100 shares, you can sell a call option against it. So for a covered call, you would basically buy back the call option that you're selling, and then sell another call option either at a further out date or at a higher strike price or some combination of the two. So for example, if you sell a higher strike price, that means you're rolling up. If you sell a farther out expiration, that means you're rolling out. And you can do both. I usually do a combination of the two when I'm rolling my covered calls. Now let me jump into a live example so you can see all of those concepts in play. So the stock that we're looking at here is TQQQ, and I just want to keep in mind that I'm doing this on a simulated account so that I can show how I roll the position and kind of how price changes. So I'm going to start by buying 100 shares of TQQQ to set up my covered call. So I'll go over here to the trade tab, I'll click on ask, and as you can see right here I have 100 shares and I'll just send this order in at market price. So I'll click confirm send. Once that order gets filled, I can go right here to the monitor tab and I can see that I now have 100 shares at $119.94. Now, the next part for setting up a covered call is to sell a option against it. So I bought 100 shares and I am now going to sell a call option at a higher strike price. So I'm going to sell it at this blue line, the $121 strike price. So let me go ahead and do that now as well. I'm going to come right here. I'm going to go to 4 days out because I want to sell for this week. Scroll down to the $121 strike price, as you can see right here highlighted, and then I'm going to click on sell. So, and let me change this to one contract because I only own 100 shares of the stock. So I'm okay with this price, 201, 205. I'm going to just hit send. Perfect. So now what we have in the account is I own 100 shares and I am selling a call option against it that expires this Friday. And for selling that call option, I just got $207 in premium. Now, the next step, now that I actually have the call option, I just want to walk through like what that means. So I own 100 shares and I'm selling a call option here. So if by Friday this call option, this stock price ends up over this call option, then I will get assigned. I could let myself get assigned and these shares would get taken away. I can also close out this position early, or I can roll this position. So now what I'm going to do is, because I'm on a virtual account, I'm going to go ahead and jump forward to Thursday, and this could take a few minutes to load. Now that we've loaded the data for Thursday, as you can see, we set up the covered call right here on the 28th, and right now price is higher than where my call option is being sold. So in this case, I'm thinking I want to roll this position, and now I'm going to show you how to roll this position. So I go back to my call option here, which I sold at 121. And as you can see, the price is currently above that 121 price. It's currently at $123. and the call option that I sold is now worth $2.76 instead of $2.07. So in order to roll this position, I first have to buy back this contract. But I have to keep in mind that buying back this contract is now more expensive than when I sold it. So I do have to pay up some additional money. And as you can see here, the P&L is negative $75 because it is worth $75 more. So let me start step 1 of rolling a covered call by closing this contract. Create closing order. I'm just going to go ahead and confirm send. So now that I've sent that order, you can see that this quantity has gone to 0 and I have closed out that call option. So we can go here and double check. I sold it for $207 and I bought it back for $279. And now what I'm going to do is I'm going to roll the position, which means I'm going to open another call option. And what I'm going to do in this case is I'm going to roll it both up and out. So I'm going to a further expiration, which is the following Friday, and I'm going to roll it to a higher price. I see the stock is currently at $123, so I'm going to go ahead and roll to a higher price. In this case, I'm going to go ahead and roll to $124. I'm happy with this price, and I'm going to roll it here. So here again, I'm selling that call option at $124. So make sure I set all my contracts correctly, and then I can hit send. So what that means is you can now see that I'm selling a new call option here for 8 days out, so the following Friday, and then at a new price. So that was successfully rolling this position. I'm no longer selling this call option. I bought it back, and I am now selling a call option at the 124 strike price. So up here. So again, if the stock price finishes above this by the following Friday, then I will get my shares assigned and get those taken away at that stock price. But if it stays below, then I'll just get to keep this premium and the shares unless I decide to close the position. So I kind of want to walk through the math behind rolling this position so we can go back here and look at our filled orders, specifically around collecting premium for selling. So initially I sold the 121 call for $207, but then I had to buy it back for $279. So let me go ahead and subtract that here. And then I sold the following week call for $251. So then I can add that back in. So as you can see here, I'm still going to end up net $179 just from selling my call premiums. But in addition to that, because I bought the stock at around $120, I now get to capture the move from 120 all the way up to 124, assuming the stock closes above that. So if the stock price does close above that at expiration, then I still get this difference as well. So $120 all the way up to 124 is $4 times 100 shares is $400 additional dollars. So if it does close above 124, I would get this additional $400 for a total profit of $579. So the benefit of rolling a call is if you think the stock is going to continue higher and you want to capture more of the actual underlying stock move, but you can also capture premium from selling these calls as well. So one of the important things to keep in mind when rolling a covered call is that you want to roll in a way that puts you in a profit. So for example, when we looked here, I initially got 207. I sold it. I bought it back for 279, so that would put me at negative $79. But then I sold another call for $250, which put me at a net profit of $179. Sometimes, depending on how you roll the position and close it, you can end up in a negative scenario here where you have to end up paying a little extra money in order to roll the position. So that was the entire example of going through successfully rolling a covered call. Feel free to leave any questions or comments down below and I'll make sure to answer them. And if you want to see live examples of trading covered calls as well as rolling positions, feel free to check out some of my weekly videos as well. And don't forget to like and subscribe. I'm trying to get to 500 subscribers as soon as possible, and I'll see you all in the next video.